Welcome back to Builders, Makers, Doers. Here we are. I'm Andy Bassett. He's Elliot Bassett. Today, we're going to talk about workers' compensation, but specifically a change that happened to what's called the net reporting rule in the state of Nebraska, where we sit. So really interesting thing for people that are managing costs when it comes to work comp, and another thing that is going to add value to that. So
let's build off that. All right, welcome back to Builders, Makers, Doers. Here with just us two today.
It is.
Apologize, we don't have a guest. You got just us two.
Yeah, every now and then it's good to level set.
That's right.
Just chat a little bit.
That's right. Well, as you went through in the intro, we thought it would be a good topic today to discuss a very specific workers' compensation change in the state of Nebraska. But if you're not from Nebraska, good news. We'll talk about how this applies across multiple states. And we're going to broaden it out because many other states have already done this. And I think it's important that everybody, if you're a contractor, specifically out there, that you know about this, but really anybody that is, heavy work comp, blue collar, you're going to run into this type of nuance in your work comp program. And so before we get into the actual change, though, there's a reason why I think this is so top of mind. And that's just because work comp is becoming even more of an impact to businesses in construction and manufacturing and wholesale distribution, et cetera, than it ever has been because of the experience mod, the level of focus that's been getting. To get on some of these job sites, you have to have a certain mod. So not only if your mod goes up, are you paying more in premium, but you might lose work on top of it. So dive into that a little bit. Just what are we seeing in the market? How is work comp impacting contractors, specifically around that, outside of just premium impact?
Yeah, well, I think that's a good point because if you haven't experienced this and you're watching, you will likely, which is just what you said. I mean, people have always, when it comes to the E-mod, people have always understood that past experience is going to impact my future cost of workers' compensation. I can't avoid it. Doesn't matter what insurance company I'm with or whatever. My mod is going to follow me, follow my company. That stands true, right? I mean, that hasn't changed. There's some things that we'll talk about that have changed in the company's favor in the state of Nebraska and how it's calculated. But that's a piece. And that's a tangible, real easy piece to see. But what you just referenced is becoming more and more prevalent. It's always been there, which is the ability to actually win work as a result of the mod, right? To be able to get on job sites. And so we're seeing, specifically in our market, but I think across the country, we're seeing more and more demand, I'll say, from these larger developers, these larger GCs, these big projects to require certain safety requirements on the job sites. One of which is when they're vetting contractors to come on site, it's looking at what their mod is, their E-mod. They're looking at OSHA recordables, they're looking at the E-mod. And, most of the time what you'll see is if somebody's mod is above a 1, they may not be qualified to work on the job, or they certainly have to explain why it is what it is. And so to your point, you can really start to get your head around ROI when it comes to investing in safety and specifically controlling that mod, not only from an insurance cost standpoint, but just from the ability to go win and participate in work on these large job sites. So it's definitely a trend we're seeing. We're getting calls in the operating company at Ellerbrock-Norris. We're getting calls a lot from clients that are navigating through this. We've had to write letters on behalf of clients that are, just on the edge of performance for whatever reason. But yeah, I mean, it's a real deal. And so again, as we dive into the mechanics of what we're going to talk about today, it is one thing that Nebraska is doing and other states have already done that potentially creates a more positive, ability to control that. But yeah, it's a big deal and people should pay attention to it.
Well, absolutely. And I know that, in the past, it kind of felt like we've seen this evolution with work comp and safety. And, over the last, it feels like maybe a couple decades, it went from being just like if I've got insurance for an employee getting hurt, right? And the business owner knows that they might pay a little more in premium. And now it just feels like, number one, with rising rates, and work comp's been in a soft market for quite a while, but still, costs are going up. I think we would all agree to that. the impact of your mod going up is much bigger from a dollars perspective. But when you start to add in these other hidden costs that we don't always think about, and oh, by the way, your mod sticks with you for 3 years. Mm-hmm. So if it goes up above a 1, you may not be able to bid that type of work for 3 years.
Yep.
So it can be a compounding effect as well. What happens over that 3-year period? Your prior customers, maybe they find somebody else to do that work and build a good relationship, and now you can't even get back in when the door opens back up in 3 years. So it's a big impact, and we've seen a lot more emphasis being put on safety, as you mentioned, and things like that. But if you're sitting out there, obviously, if you're bidding those jobs today, you're feeling this, right? You're seeing it. But for those out there that might be a smaller contractor or something like that, thinking like, that's for the big guys, that doesn't apply to me. Just always remember that these trends start with the big contractors. They start with the big job sites, but then they start to trickle down because that large GC that's requiring it starts to require that of their subs. And then when those subs go out and they do a different job, they're going to hire subs, and they're going to start to require those things as well. And so it starts to trickle down, and that becomes the new normal, right? And so we just want to make sure that we're thinking about that you've got the right safety practices in place and that you're doing the right things. So maybe speak to that for a minute. Like, what are your thoughts around smaller contractors? How should they be looking at some of this stuff as well?
Yeah, I mean, I think your point is exactly spot on. Is regardless of size, regardless of, kind of where you're at in your business from a kind of life cycle perspective, you've got to be thinking about this stuff, right? Yeah. You've got to be positioning it because you might grow. That could be a part of it. Is all of a sudden, all of a sudden you could be to a point where it becomes, more real. Or like you said, when you see these things start to work their way into jobs, I mean, like a lot of what we're talking about here, data centers, right? Everybody knows data centers are going up everywhere. These are the types of projects that are really spurring some of this conversation. You're seeing the stiff requirements. That stuff starts to work its way into these other projects. So again, for the smaller contractors that you're like, well, I'm not doing work on data centers, or I'm not seeing this, I would just understand it. I would research it, and I would always be positioning your company to be prepared for it because it could come to where you find yourself in a job that you've got to be ready to answer these questions, be able to show the safety strategies and structure you've got in place. But at the end of the day, regardless of whether that day comes or not, you're going to perform at a higher level. You're going to be a better company. You invest in this. People want to work for companies that invest in safety. People want to, you're going to see the ROI in turnover. You're going to see the ROI in equipment maintenance, vehicle maintenance, all of the things that go along with being safe. So, I mean, it all coordinates together. But I mean, I guess to your point of watching out for it, if you haven't seen it, you likely will. It's becoming more and more prevalent. Something also I want to touch on that you said, the work comp market from a rate standpoint has, held relatively soft. One interesting thing, though, is meaning rates haven't necessarily gone up a ton like other lines of insurance, but what has gone up during that time? The cost of payroll, right? The cost of people. And so it's an interesting dynamic is that while that's been the actual cost of workers' compensation continues to be, the premium itself continues to rise for people because just, the cost of wages and everything continues to increase. So I think, again, even if rates hold flat, we're going to continue to spend more when it comes to workers' compensation as growing companies or just as payroll demand increases. And so even if rates don't tick up, this is always going to be really important to keep control of.
Well, and just 2 seconds on that. We don't want to bore anybody with like an Excel doc here, but it is important when you're calculating what you're going to pay in workers' compensation premium that you understand what goes into that calculation, which to Andy's point is you have a rate per class code of payroll, whatever you're doing for an electrical contractor, plumbing contractor, clerical, whatever. They all have a different rate per 100 of payroll. And then that rate gets multiplied by your payroll and then also multiplied by your experience mod with some other, fees and things that go into the calculation. But for the most part, those are the three big levers, right? Your rate, your payroll, and your experience mod. That's going to calculate to your ultimate premium that you're paying on a daily basis. So you want to make sure that you understand all three of those and that you manage the things that you can, which you can manage the rate, you can negotiate better, you can, find a better carrier, things like that. And you can also manage your experience mod. Your payroll is going to be what you pay your people, right? And to your point, that's most likely going to continue to go up because we're paying people more than we ever have. And so I think that's important. But going back to just something you were talking about in there, if you're a contractor, smaller contractor, like this is maybe a little bit new information. I've heard this a little bit, but I don't really know what I can do to control my mod. What are the top few strategies that you're talking to contractors like that about that they should consider starting to invest in? Like what's the highest ROI from, some of the things that they could be doing to manage that mod?
Yeah, I mean, that's a good point because not only is it the mod, and I don't want to make light of what you said, the rate and the negotiation, your ability to negotiate when you're in a better position from a safety standpoint is significant, right? And so what are the three? So we always kind of talk about like three phases of, worker safety, and it's pre-employment, it's ongoing, and it's post-injury. Right. And so where you can make the biggest impact, in my opinion, is having really diligent pre-employment strategies, making sure we're bringing the right people on, we're doing the right types of, physical and background type check to make sure somebody coming into our organization is able to do the work. They're not going to put them at risk or others at risk. So that's number one. Number two, it's the ongoing, constant communication, building that culture of working safely, making it just part of who we are, that everybody goes home the way they came to work mentality. And then the final piece is post-injury management. No matter what we do, no matter how good we are at bringing people on board, no matter how good we are at having safety strategies and a culture of working safely, things can happen. People make mistakes, bad things happen on job sites. When somebody gets injured, it's how do we manage that post-injury? And it's things like transitional duty return to work programs, it's occupational medical clinic relationships, all these things we can do to minimize the impact on that person as well as our company when it comes to future costs of insurance and the mod itself.
Yeah, and all three of those are super important to be working through. I mean, you may not be able to do them all at once, but start to think through how you're handling each of those because they are really important and they have a meaningful impact. I mean, even I think a lot of folks that aren't well-versed in work comp or haven't had the injuries, the post-injury return to work programs and strategies we use to better manage that claim have a massive impact on your mod. And a lot of people don't realize that. They're like, once the guy gets hurt, that's what I got insurance for, which is true. But there are a lot of strategies you can use to better manage that claim so that the impact is significantly reduced on the mod. And again, we're going to get into a couple of the changes here. But I think all this is good to frame in kind of where we're at. I don't want to gloss over, though, what I think is one of maybe the most underutilized strategies that business owners don't have the full control over, but it's how your story is told to underwriters. We talk about negotiation on rates. I think this is honestly one of the biggest things that business owners should be thinking about. You, as a business owner, you don't have the luxury of typically talking directly to the underwriter that is offering the rates that you're going to pay on your work comp.
Yeah.
And so it's obviously your first decision is who out in the market can best tell my story. But what do we mean when we say tell that story? Because everything you just went through is amazing. But if an underwriter doesn't know about it, they can't price that in. They can't figure out why you're a better plumbing contractor than this guy over here. And so talk through that a little bit. What do we mean when we say tell the story?
Yeah, well, it's almost embarrassing to say what actually oftentimes gets to an underwriter's desk in our industry, which is they're called accord forms. They're literally the most archaic piece of
look like a typewriter
paper. That is intended to tell a story to an underwriter of why this particular contractor, manufacturer, wholesaler, distributor, whatever business you're in, is best in class and deserves, best in class pricing and underwriting, et cetera. That piece of paper doesn't tell. I mean, if you think about, we've got an underwriter wherever that is, working out of their house, out of an office, whatever, and they've got a stack of these, and they're trying, theoretically, they're on digital now, but they've got all these submissions coming in. They're trying to sort through why is one best in class over another. A piece of paper is not going to tell that story real well. So it's really all the things you're talking about is how do we take everything we're doing as a company, not just safety, but it's like, our key personnel planning. It's our, how do we attract and retain people? What's the, long-term vision and perpetuation strategies of the company? All these things brought together that go out and tell an underwriter, this is why we a mechanical contractor versus this mechanical contractor that you were looking at yesterday, this is why we're better.
Yeah.
This is why we're best in class. This is why we deserve your attention. We deserve the best, program as far as, how it's structured, we've priced, all those things. Because at the end of the day, it is still underwritten.
Yeah.
And back to this point of if something bad happens, an underwriter can hang their hat to management or leadership that says, this is why we did what we did. This is why we made the decision to give this company the best program. Even though this thing happened, they're running a good company, know? And so it gives peace of mind to the underwriter. It gives peace of mind to you as a business owner that we're on the same page here to try to put the best program in front of us and work through this together as a long-term partnership. So that is oftentimes missed in our business. So I think you as a business owner, whoever's representing you when it comes to your insurance program and the workers' compensation side specifically, make sure you're asking, how are you telling my story? How am I guaranteed to get the best look when it comes to an underwriter reviewing my program?
Well, and I think it's collaborate on it.
Yeah.
A lot of times the broker or agent doesn't know some of the things you're doing, doesn't know especially if it's not directly related to safety or work comp and some of the things that we may not think about that are important, that de-risk the business to an underwriter. Make sure that those are being told and you see the story that's going to the carrier to make sure that you're getting the best opportunity. Because what we don't realize, we all want to think that we just throw this stuff into an AI engine and, technology just spits out a rate, right? That is not how insurance companies operate, and they probably aren't going to, based on what we see, for a long time.
Right.
And so it's very human underwritten, and they have a lot of levers they can pull. I mean, they have different rate structures that they can put in place. They call them loss cost multipliers. They have flex credit they can apply. They have all these different mechanisms that they can say, where do I need to price this risk, this company, to make money over the long term? And they're going to do everything they can to get it there. And if they feel like it's a competitive company that can be profitable to them, they're going to get aggressive.
Yep.
And that's where you can see your rates lower. But again, it all comes back to how do we get them the information they need to make that call.
Exactly.
Okay, so all that being said, we kind of laid the foundation there. Probably got a little bit too into the weeds on
That's all right.
us nerding
There's
out.
good
on work
nuggets
comp,
there.
but yeah, let's talk through what we set out to accomplish here, which is some of the work comp changes in Nebraska, but also speak to what this applies in other states. Other states have already made some of these changes to a net reporting, and so talk through that. Get a little bit. Let's nerd out for a minute on it.
Well, yeah, right. Well, so very specifically, we're talking, like Elliot said, Nebraska, and Nebraska is an NCCI state, National Council for Compensation Insurance. Some states are not. They have their own bureau that they calculate their workers' compensation. So this is more specific to the NCCI states. But one thing that I think this will connect to that we talk a lot about is as you implement these strategies, as you do all the things we're talking about, retaining more of your own risk becomes attractive, right? Betting on yourself.
Yeah.
You're like, I operate better than most people. I'm willing to take on some of that risk to save the guaranteed cost dollars that would otherwise go to an insurance company and bet on myself. One of those very probably initial strategies and most common strategies is to take on deductibles. People are very used to that, right? When it comes to property insurance or whatever, you have a deductible, you have a fire and you pay your deductible and the insurance company pays the rest. The same can happen on the workers' compensation side, right? So then there's a couple different ways. Like if you're a smaller contractor, there's just some set smaller deductible strategies you can take. But as you grow and you become bigger, you've got larger payroll, you've got, more risk, you're performing well, you can start to take big deductible strategies, 50, 100,000, 150, 200,000, $250,000 deductibles. Those have always been attractive strategies to, again, retain the risk yourself, reduce the cost of insurance, because obviously you're taking on the first X dollars, the insurance carrier is going to charge less premium. So you kind of look at it and you do the math and you figure out, strategically, does this make sense? And like specifically in the state of Nebraska and others that were considered gross reporting states, which we'll get into in a minute, that was kind of where it started and stopped, right? Yep. Now that's shifted significantly. Many states were already here again. So depending on what state you're in or watching this from, this may already be the case. But Nebraska, just as of 1/1, is going to shift from being what was called a gross reporting state when it came to how deductible related claims were reported on your NCCI your mod, to net reporting. What that means is if you had the deductible strategy before and you had a claim, so we'll use simple math. You had a $50,000 deductible, you have a $100,000 event. Prior to that, in Nebraska, that gross value was still calculated in the mod. So even though you as a company took the first 50,000 on, the full 100 was used to calculate your mod. Net reporting states, many which were already there, it would be different. We would net only the difference between deductible and what was paid. So in the example I used, the 50,000, you paid the 50 in deductible, is a $100,000 event. That difference, that 50,000, is what goes into calculating the mod. That's a big deal and a big difference when we talk about things like being able to get on job sites and obviously the mod itself impacting costs going forward. So now, as a contractor in Nebraska or primarily operating in Nebraska or just operating in Nebraska, that's a big change to where, okay, this strategy, while I've looked at it before, maybe it made some sense. Now, let's factor out what that could mean to A, get on jobs because we can carry the mod down. B, what's that mean when the mod ticks down a few points, and what's that mean going forward over the next, like you said, 3 years? So it's a pretty big change that Nebraska needed to do from a competitive standpoint, frankly. And many other states had already done. So yeah, that's the change in a nutshell. And for again, people operating in Nebraska, it's a big deal. It's something that should be A, understood, and probably B, at least looked at if it could be something that makes sense for your company.
Yeah. Well, definitely. I mean, you should at least evaluate it, see the impact, because you can run the impact on your mod based on your specific situation and see it pretty clearly. It's one of the only lines of insurance that we can do that as easily as we can, or at least that portion of your work comp. But I think too I love what you said, like bet on yourself a little bit. And if you're doing these strategies already, I think sometimes it is frustrating to some of those contractors. Like, they're investing a lot into safety, into managing claims, and they might have teams of people sometimes that it's basically what they're dedicated to doing, and still feeling like they would love to better manage that cost even more than they already are, but they just couldn't because of the system. Exactly. And so I think this is a great way to say, hey, if you're already doing all those things, this could be a next natural step to say, let me take on some more of that risk from a cash perspective. Mm-hmm. But it's also not the calculation. If we were having this 10 or 20 years ago, would have certainly been premium versus deductible, right? If you're gonna have a claim once every 3 years, how much premium can we save? Is that calculus making sense? Now it's completely different when these job sites are requiring certain mods that you got to start to think about. Man, if my mod goes above a certain point because of maybe it was a complete accident, as you mentioned, like you did all the right things, you've got all the right stuff in place, but somebody gets severely injured. That can happen and will happen, frankly. Yep. And if now you cannot get on a job site because of that, you're losing more than just premium dollars. Yep. And so again, that's got to go into the calculus of, does it make sense for me to take on more of that risk? Are those some of the conversations you're having with business owners? Like, what does that look like? What are you hearing out there? From that perspective.
Yeah, that's exactly it. It's just, it used to be premium against deductible. You try to map it out and it just completely shifts it. So yeah, I mean, because you think about, depending on what type of deductible strategy you can take on, I mean, you could be eliminating, a lot of claims that would otherwise, just be slowly ticking up the mod. Now those are being handled, inside that deductible. They're not even going to get calculated into the mod. And so you'd start to stack that over a 3-year period and what that can do to reduce the mod. I mean, you got to start looking at what those real dollars amount to, from opportunity costs on job sites, obviously the future, or the future premium impact. And so I think it just completely changes the perspective on how you look at like the ROI of taking on that risk.
So that brings up real quick, frequency versus severity. Yeah. I think that's an important concept everybody should understand, because you mentioned even some of those smaller claims that you might have and are going to have now don't even really hit your mod.
Right.
So talk through and maybe go broader, just the concept of frequency and severity when it comes to insurance, underwriting, all of that.
Yeah, I mean, the example I used would have been more of a severity situation when I'm talking about a $100,000 event, right? It's a simple math one to wrap our head around the idea here. But yeah, your point is exactly that. If you really look at how the mod is designed to be calculated, it is going to take into account frequency of events much more than it is severity. So if we just tack up a lot of these everyday things that happen, $5,000, $10,000, $15,000 events over time, that is going to impact our mod more so than a single event. And there's a lot of reasons technically why that is. But so again, with a deductible strategy, these things aren't going to hit the mod. So you start to talk about removing 5 or 6 or 7 or whatever the number is of these smaller kind of everyday injuries, if you will, that would otherwise have been paid by the insurance company and calculated in the mod. That can really start to move the needle. So those are the things that we, or whoever's working as your advisor when it comes to work comp side, should be helping you understand and helping you be able to kind of map out, because that's where you could really see a return on the investment.
Yeah. I think from a financial perspective, like this is a big change for that. But the frequency versus severity conversation is a big one to have across the board. You mentioned there's a lot of reasons for it, but I mean, essentially, simply put, if you have $100,000 worth of claims, it's better to have one $100,000 claim than 10 $10,000 claims. And the reason for that is the $10,000 claims, the more frequency indicates to an underwriter, indicates from an underwriting perspective that you're a more risky operation. Why are you having 10 claims? Yep. Like, it's easier. I think people kind of gloss over from an injury perspective on work comp, but think about it like, let's take it to the extreme of fires, right? Like property. Because the same thing applies on any line of insurance. But if you have one fire that burns down your whole building, like, it's a big loss, and like, there's going to be challenges there. But if all of a sudden throughout the year you had 10 small kitchen fires, like, an underwriter's going to be like, what is going on with your kitchen? Like, what are you guys doing? Yep. And a lot of times, again, we don't think about that from an injury perspective, because like, work comp injuries can happen, and they do happen frequently. But it is important that, we're managing those small claims, that we have a story to tell, because that's what you mentioned. We've had to get involved sometimes when, a client can't get on a job site because their mod's above a certain point, but we have a story to tell around it. Again, going back to this story to tell, because it was one employee that got injured. It was a freak deal. We had all the things in place. Maybe they just didn't listen to the training or whatever, but work comp's still going to pay. We can tell that story when it's something like that, but it's harder to tell that story when it's 10 smaller claims, because we now see trends. We see like, oh, well, sure, you guys have the safety stuff, but clearly you're not following it, or all those things that can go into it. And so I think it's important to understand that frequency versus severity calculus, because it applies across insurance.
Yeah, absolutely.
Policy lines.
Well, and I mean, a lot of this conversation is, when we talk about the change in Nebraska, it is definitely focused for larger, higher premium threshold companies, but realizing a lot of the audience watching this and listening to this is not maybe at that point yet. But everything that you're talking about, everything that positions you to potentially in the future be able to take advantage of these strategies, it takes understanding why, how this stuff works, asking the questions, and then implementing very early on how you create that type of culture, that type of philosophy, that type of mentality, not only, in ownership and leadership, but just across an entire organization. Because I just can't, and specifically I'll say, for growing companies. Like, I can't tell you the number of times when we've seen a client of ours, or we've heard about businesses that, just kind of overnight, all of a sudden things turn south. And it usually is when you're in pretty significant growth. You're bringing a lot of new people on, you're potentially turning some people over. Maybe you're getting into new markets, maybe you're getting into new product lines or whatever it is with that growth. And that just tends to bring the potential for injury. And it's amazing how quickly that frequency can spiral out of control. And to your point, that then haunts you, for lack of better terms, for 3 years following. So again, whether or not these things can be real today in your company, you have to be thinking through these types of strategies to position yourself going forward. You're going to run a better company as a result.
No, totally. I mean, I think that's just good business advice in general. As you're growing, you want to be continually upskilling in all the areas of your business versus just, grow with abandon and figure it out later. You're going to wake up one day and realize you've got a lot of work to do to continue to be able to grow. And so I think use these types of strategies at the right points in time in your business. And then if you're doing the right things over time, some of these types of strategies like net reporting and all that are going to become a valid strategy for you.
Exactly. And if you're watching this and you're curious about what your state is, it wouldn't take much but a Google search to figure out real quickly.
Net reporting versus gross
Net
reporting,
versus gross. Yeah. But, again, I think using the change for the reason here in Nebraska, for the reason to kind of have this discussion, it all starts to connect back to, at the end of the day, companies that take this serious, run in the trades, run an organization that has a culture of working safely, the return on that investment comes in so many places. Yep. And this is just one.
Yep. Totally agree. Well, anything else we should leave the audience with today?
No, I realize we got a little technical at times, but hopefully thematically you can kind of grab that, again, this is important. It's important to understand these things too, and understand changes as they come. There's reasons behind them. There's competitive advantage for people when they know that these things are happening, and you can look into them and see if they make sense for you, because at the end of the day, there's a lot of competition out there, and you got to be able to do what you can, pull whatever leverage you can to get on, win jobs, and perform the highest level on job sites.
Exactly. Cool. All right. With that, we'll see everybody next week.